Ferrari stock, what's it worth, where's it headed from here. We're going to check out some of the fundamentals and then we're going to run a valuation to see where it could be headed in the near future. So jumping right into it, we have a price per share of 435, price to earnings of 58, market cap of 78 billion and enterprise value of 80 billion. So right away with a price to earnings of 58, there's going to be a good amount of growth priced into the business, but we're going to have to check back later with that valuation to see what that actually looks like. So Ferrari has a cash debt ratio of 0.46, which means that for every dollar of debt, they have 46 cents. When it comes to their profitability, we do see that their margins versus the industry are looking phenomenal. Currently, their gross margin is 49.8, with a median of 50 in the last 10 years and a maximum of 52, so just below that median. Not a terrible sign, but it does make me wonder why their gross margins are not the highest they've ever been. Maybe something to do with electric vehicles or some new requirements. When it comes to their operating margins, they're currently at 26.99 of the highest in the last 10 years. They're netting or taking away after all the expenses and the business operations, they net 20.97% of their revenues. So above their median, slightly below their maximum for the last 10 years. Not a bad situation. And for free cash flow, they have a median of 12, current of 14, so slightly above their median for the last 10 years on free cash flow. I use these to tell me a little bit about the business and how the operation is doing, but for management strength, I use ROE, ROA, ROIC, and ROC. And for all of these, we see solid green bars versus the industry, although versus history, sort of mediocre for ROE, ROIC, and ROC, and then for ROA, pretty solid. Although a 44% ROE is solid, or return on equity. Return on assets, 15.78, solid again. No single digits here, and versus the industry, they're doing quite well, so strong management. When it comes to the price to earnings ratio, they have a median of 38, and the current is 58.64, so not the highest they've had in the last 10 years, but still a fairly high price to earnings ratio, so a good amount of growth priced into the business. We can see that they have a trailing 12-month revenue of $6.4 billion. So if you remember, they net 20.97% of that, which means in the trailing 12 months with their current net margins, they've netted about $1.35 billion. When it comes to their financials on an annual basis, we can see revenue up and to the right over time, and their margins increasing as well, so that net income is growing fairly steadily. Looking at it on a trailing 12-month basis, we can see that net income is increasing gradually and revenue is fairly steady. I would like to see higher cash debt ratio, preferably more cash than they have debts, so if there was any problems they could pay that down. But this is a business that the revenues are very steady, net income is very steady, and they have pricing power. So if they were to raise their prices on cars, there's still going to be people buying Ferraris because it is a status symbol. So they do have a very wide moat, and nothing is really going to stop them from selling their vehicles, because if they make a one of one or a 300 edition or 300 models of a specific type of car, then it's still going to sell out. There's still going to be people that buy it just for the status. We do also see a good sign here of share buybacks, so increasing shareholder value by decreasing share float. Their operating revenue by business segment is mainly in their cars and spare parts, followed by their sponsorships, commercials, and brands, with a small percentage in engines and others. By geographic region, their operating revenue is very spread out. 25.7% comes from the United States, so this is a worldwide brand. But to see what it's worth and where it could be headed from here, let's check out a DCF. So in the DCF, we have high business predictability, and for earnings per share, there is data on the average for 10-year, 5-year, as well as 3-year. And for free cash flow, we have data on 10, 5, and 3-year averages as well. So based on free cash flow, we have a 10-year average growth rate of 13.8. So priced in at 13.8, there's a fair value of 103 and a current stock price of 435. So a high amount of growth priced into the business, although we do see that in the 5 years it's averaged 22 and in the 3-year it's averaged 88. So growing averages in their free cash flow. Seeing what's currently priced in, there's about 35% growth priced in for free cash flow for the next 10 years. The way I see this is that it is trading at a premium. Looking at earnings per share, with that 17.2 of the last 10 years priced in, we have a fair value of 192, whereas currently 435. And there's currently about 29 to 30% priced in for the next 10 years. So we can see here that there is high amounts of growth priced into the business. This is just a fair value. Stocks can always trade for higher or lower than their fair value, a premium or a discount. But the DCF is telling me that this business is not cheap. So for a fair value to go higher, they would need to earn even more than that 30% in the next 10 years, which is possible based on their 3 years. So I think with this business, you're really buying into the moat, which means that they could raise prices, they could raise their margins, they could charge twice as much as they are for a car right now, and people will still be lining up to buy that car. So this is sort of a billionaire's stock. Uh, People that want to show off their money, want to show off their wealth, and have relatively few ways to do that. They'd pay $1 million for a car if they really wanted to. So you're sort of buying into the moat with this business. That being said, the valuation is not cheap right now, but you're paying a premium for that wide moat. This is my valuation and hypothetical framework for Ferrari, RACE stock. If you like these type of videos, leave a like, subscribe, and I'll see you next time.